Welcome to the Pro Ticker Deep Dive.
It's fantastic to be here today.
Today is Tuesday, February 24th, 2026. And I don't know about you, but if you've been anywhere near a trading desk this morning, or frankly just, scrolling through financial feeds or watching the tickers go by on the networks, you can absolutely feel it. The entire market is just holding its breath right now.
It really is. It has that eerie silence before a thunderstorm kind of vibe. If you look at the volume on the indices today, it's remarkably light. People are basically sitting on their hands. No one wants to make a sudden move before the big reveal.
They're waiting for the bell to ring. Because tomorrow, Wednesday, February 25, right after the closing bell rings and traders log off to pour a very stiff drink, we get the main event.
Oh, yeah.
The AI bellwether. The company that has basically strapped the entire stock market onto its back for the last 3 years is releasing its Q4 fiscal 2026 earnings. And, I don't think I'm exaggerating when I say this isn't just a financial report anymore.
No, not at all. It's pure cinema at this point. It has characters, it has conflict, it has stakes that are almost impossible to calculate.
It's the Super Bowl in the stock market.
Exactly. For market watchers, you and me included, this is the season finale of the biggest show on Earth. And the stakes couldn't be higher because this one single company has essentially become the proxy for the entire technological future of the human race.
Which sounds like total hyperbole, right?
Yeah.
But when we actually dig into the numbers today, it really isn't. We're talking about the single most important event determining the health, not just of, your 401k or a specific portfolio, but of the AI revolution itself. And look, the numbers we're going to talk about with you today, trillions in market cap, billions in quarterly revenue, they're so big, they almost stop sounding like real money. They turn into these weird abstract concepts.
They sound like the GDP figures for mid-sized nations. When you're moving $60 or $70 billion in 90 days, you aren't just a business anymore. You're a macroeconomic force.
100%.
Yeah.
So our mission today, and the reason we're doing this deep dive right now, literally on the eve of the release, is not just to preview tomorrow's numbers.
Yeah.
Anyone can go read a consensus estimate online. We want to take a truly holistic look at this company's massive fiscal 2026 run. We need to talk about the Blackwell cycle, which is really just hitting its stride. We have to get into the geopolitical thriller unfolding right now with China and DeepSeek.
Which is a story straight out of a spy novel, by the way. We're talking smuggling, secret data centers, government intrigue.
It really is. And finally, we're going to look at the roadmap to 2030 and some truly wild predictions about where this stock and this whole technology could actually go. So buckle up. Let's unpack this.
Let's get into it.
Okay, let's start with the immediate future, the eve of earnings, tomorrow afternoon.
Yeah.
What is Wall Street actually expecting? Because the bar has been set incredibly high. It feels like every single quarter the bar moves higher, and every quarter they somehow hurdle it. But eventually, gravity has to kick in,
Right? You would certainly think so. The law of large numbers usually dictates that growth just has to slow down eventually. But the bar is indeed in the stratosphere right now. So let's look at the consensus. Wall Street analysts are looking for revenue specifically in the range of $65 billion to $65.7 billion for the quarter. Just pause on that for a second. $65 billion in 3 months.
That is a staggering amount of money flowing through a single corporate entity. To put that in perspective for you listening, that is roughly the annual GDP of a country like Slovenia, generated in 90 days.
Right. Or think of it this way. That is more revenue in a single quarter than a lot of Fortune 500 companies will generate in a decade. And to give you the growth context, that represents a year-over-year increase of roughly 67%. So despite being a multi-trillion-dollar company, they are still growing like a nimble, hungry startup. Usually, as companies get this massive, you're happy with 10% growth. You're popping champagne for 15%. This is 67%.
It just defies the laws of financial physics. What about the bottom line?
The earnings per share, or EPS targets, are hovering right around $1.52 to $1.53.
Okay, so those are the official numbers. $65 billion and change and $1.53 a share. But we all know how this game is played on Wall Street. There's the official number, and then there's the whisper number.
Precisely. And that's where the actual risk lies for tomorrow. The official consensus includes all the bears and the really cautious analysts. The whisper number is what the traders actually believe in their gut.
It's what they're actively betting their money on.
And if you look at the prediction markets, places where people are putting actual hard currency on the outcome, they are pricing in a 95% certainty of an earnings beat.
95%. So basically, the market thinks this is a completely done deal.
They think it's a sure thing. And that is incredibly dangerous. because when a beat is fully priced in, the stock doesn't always go up just because they beat the number. We've seen this happen before. They could beat the revenue estimate by $1 billion and the stock might still drop if it's not the absolute perfect beat.
Right? The classic priced for perfection problem. Investors are basically saying, hey, we knew you were going to beat it, so we already bought the stock last week. Now you have to show us something new.
Exactly. So the market is really looking for what we call a double beat. They need to smash the Q4 estimates we just talked about, the revenue and the earnings, but arguably more important is the forward guidance. They absolutely need to raise the guidance for fiscal 2027 Q1. If they come out and say, hey, we made a mountain of money, but next quarter looks a little flat, the stock will get heavily punished.
So they have to say, we made a fortune, and we're about to make an even bigger fortune next month.
Yes. They need to show acceleration, or at the very least, sustained momentum. They have to tell a story that says the peak is nowhere in sight.
Now, despite that immediate risk, there is this blue sky thinking that seems to be really pervasive among the bulls right now. There's a strong argument in the market that despite all the talk of volatility, the actual demand story for the AI revolution is still somehow being underestimated.
The logic behind that is actually very sound. It's the CapEx argument.
Capital expenditure.
Right. You have to follow the money upstream. Don't look at the stock price today. Look at the customer's wallet for tomorrow. Look at the capital expenditure of the absolute biggest customers. We call them the hyperscalers, Microsoft, Amazon, Google, Meta. If you combine their projected spending for 2026, it is over $700 billion.
It's $700 billion. That is an absolute ocean of capital. That's enough to fund the entire U.S. military for a huge chunk of a year.
It is. And here is the picker for tomorrow's earnings. A huge chunk of every single one of those dollars flows directly to this company's top line. They are the toll booth. You cannot participate in the AI race without paying their toll. So if the hyperscalers are spending $700 billion, a massive percentage of that has to eventually end up in tomorrow's earnings report or the next one.
It's the old analogy of selling shovels during a gold rush, except you're the only person on Earth who knows how to make a shovel, and the shovel costs $30,000.
And everyone needs 100,000 shovels immediately. And if they don't buy the shovels, their own shareholders will punish them for falling behind in the AI race. It's a forced march into this infrastructure.
Right. And that brings us to the shovel itself, because the product has fundamentally changed this year. We aren't just talking about the Hopper generation or the H100 anymore.
No, we are firmly in a new era.
Let's transition to Section 2, the Blackwell era. We really need to define this technology because the financial press throws these names around. Hopper, Blackwell, like everyone listening just automatically knows what they mean. But fiscal 2026 has been entirely about the messy, complex transition from Hopper to the new Blackwell architecture.
This is the critical transition. And we need to be very clear here. Blackwell isn't just a faster chip. It's not just a speed upgrade, like going from, an iPhone 15 to an iPhone 16. It is a platform.
Okay, unpack that difference for us.
Yeah.
Why is it a platform and not just a really fast chip?
Because of how it integrates into the physical data center. A chip is a component. It's a piece of the puzzle. Blackwell is designed from the ground up as a system. It combines multiple GPUs, a dedicated CPU, and incredibly fast networking into a single unified unit. It's essentially a supercomputer in a box. But the headline metric that everyone cares about and the reason these huge companies are spending billions on it is throughput. Blackwell offers 10 times the throughput per megawatt compared to the previous generation.
10 times.
10 times. And that per megawatt part is the most crucial detail.
Why is the energy metric so important? I feel like we usually just talk about compute speed, not electricity bills.
Because data centers are literally running out of power. They physically cannot plug in enough machines. The power grids in places like Virginia, in Ireland, in Silicon Valley, they are tapped out. They have reached the absolute limit of what the local utility can physically provide. So if you can give a data center operator 10 times the performance for the exact same amount of electricity, you haven't just sold them a chip. You've solved an existential energy crisis for them.
That's a fascinating point. It's an efficiency play just as much as a performance play.
Yeah.
You're letting them scale their AI without having to zone and build a new nuclear power plant next door.
Exactly. And it's designed specifically for reasoning AI models, not just training.
Reasoning models. So we're talking about the shift from AI that just memorizes patterns to AI that actually thinks through complex problems. Like the difference between a student who memorizes facts for a test and a student who can sit down and solve a brand new math problem.
Correct. That's the next frontier system to thinking in AI. The models we have now are amazing at predicting the next word in a sentence. The models Blackwell is built for are designed to think before they answer, to plan ahead, to code complex software architecture, to do high-level math. That requires a totally different kind of compute density, and Blackwell is purpose-built for it.
So let's talk demand. We hear this word insatiable thrown around a lot. Is it still actually insatiable? Or are buyers starting to say, okay, we have enough chips for now?
It's officially off the charts. The company has stated they are completely sold out. But what's really fascinating is the product mix within that demand. We are seeing shipments of the higher-end GB300 systems crossing the GB200.
Which means customers are happily buying the most premium, most expensive, fully integrated systems.
Exactly. They want the rack-scale solutions, but the absolute most jaw-dropping number regarding demand came from management recently. They revealed the size of their backlog. Now, normally, a backlog in hardware is a few months of orders, maybe 6 months if you're incredibly lucky. They have a backlog to be fulfilled over 6 quarters, taking us all the way to early 2027 that stood at $500 billion.
Wait, hold on. A $500 billion backlog.
500 billion.
That is $500 billion.
And the CFO recently made a comment indicating that that number has definitely gotten larger since they first reported it.
That is absolutely mind-bending. That is $500 billion of confirmed orders just sitting there on the books, waiting to be physically built and shipped.
Think about what that does for the company's stability. It gives you incredible, unprecedented visibility. Most tech companies don't know exactly what they'll earn next month. They have to guess consumer sentiment or enterprise budgets. This company knows exactly what it's going to be shipping for the next year and a half because the orders are already locked in. The check is essentially in the mail, provided they can just build the product.
It essentially de-risks the near-term future. The only actual risk is execution. Can Taiwan Semiconductor and the supply chain actually manufacture them fast enough?
Precisely. And we are seeing that they are building them. Just look at the reports about Solstice, the massive new supercomputer cluster being built right now with the Department of Energy and Oracle.
Right, I saw that. 100,000 GPUs in a single cluster.
The scale of these AI factories is getting so massive that they are actively reshaping the global power grid. Blackwell is achieving the highest performance metrics we've ever seen in rigorous benchmarks like the Semi-Analysis Inference Max. It is the platform the world was desperately waiting for, and now it's here.
So tomorrow's earnings are built on the back of this massive $500 billion demand reality. But to really understand where we're going, I think we need to look back at the year that was. This is section 3, the fiscal 2026 journey. Because it wasn't just a straight, easy lineup, was it?
No, not at all. And that's important for investors to remember. If you just look at the stock chart, it looks like a smooth line up and to the right. But operationally, inside the boardroom, there were some serious heart-stopping moments.
Let's rewind to Q1 of fiscal 2026, which ended back in April 2025. Revenue was $44.1 billion, which sounds great right now, but at the time...
At the time, there was genuine panic. Remember the huge China hit?
Oh, right, the new export controls dropped.
The company had to take a massive $4.5 billion charge in Q1 because of new sudden export licensing requirements. They had all this inventory of the H20 chip, which is designed specifically to comply with the old rules for China, and suddenly the administration changed the rules again. The U.S. government said, no, you can't ship that either. They were stuck with billions in useless silicon.
That was a moment of real, tangible vulnerability. It showed that despite their absolute tech dominance, they are completely at the mercy of Washington geopolitics.
It was a brutal wake-up call. $4.5 billion just vanishes overnight from the balance sheet. But they shook it off remarkably fast. By Q2, which ended in July 2025, revenue jumped back up to $46.7 billion.
And that's exactly when they flexed their financial muscle to calm the market. They authorized a massive share buyback over $50 billion. Specifically, they formally approved an additional $60 billion on August 26, 2025.
That was a huge, undeniable signal, a company saying, we have so much free cash flow, we literally don't know what to do with it all, so we're just going to buy our own stock. It screams confidence. It tells the market, we think our stock is cheap, even at these historic prices.
And Blackwell started its initial ramp then, right?
Yes. Blackwell revenue finally grew 17% sequentially in Q2. But the real undeniable explosion was Q3, ending in October 2025.
That was the record breaker.
Revenue hit $57.0 billion, up 62% year over year. But look at the data center revenue isolated on its own, $51.2 billion.
The data center division is basically the whole company at this point. Gaming, which used to be their core business, the entire reason they existed as a company, is just a rounding error on the spreadsheet now.
Essentially, yes. It's nice to have, but it doesn't move the needle for Wall Street. But I really want to highlight the margins here. Gross margins had dipped slightly in Q1 and Q2, mostly because of those China inventory write-downs and the initial heavy costs of ramping up the Blackwell production lines. It costs a lot of upfront capital to start a new manufacturing process, but in Q3, they fully recovered to 73.6%.
And the target for tomorrow's Q4 report is back to the mid-70s.
Correct, and that is a wildly bullish signal.
Explain to the listener why that margin number matters so much. Why do huge institutional investors care if it's 71% or 75%?
Because it definitively proves pricing power. It means that despite the insane complexity of manufacturing these advanced chips, and despite global supply chain costs rising, they can pass every single penny of those costs onto the customer and then some. They are keeping roughly 75 cents of gross profit on every single dollar of sales. In hardware manufacturing, that is unheard of. Apple doesn't even have margins that high on the iPhone.
It's software margins on a physical hardware product.
Exactly. It confirms they have a monopoly-like grip on the entire market. If you have real competitors, your margins get squeezed because you have to constantly lower prices to compete for bids. If your margins are going up, it means you have no real competition. People are paying whatever you ask.
Which brings us to the elephant in the room. Or maybe the dragon in the room, given the players involved.
Yeah.
Let's move to Section 4, the geopolitical thriller. Because while the margins are recovering beautifully, the situation with China has gotten profoundly complicated.
Complicated is putting it very mildly. This is where the business story actually turns into a spy novel.
We're talking about DeepSeek.
DeepSeek, the Chinese AI startup that seemingly came out of nowhere to rival Western models, and specifically the bombshell report from a senior Trump administration official confirming that DeepSeek trained its powerful new AI model using banned Nvidia Blackwell chips.
Banned chips. So these are chips that are technically illegal to export to China under strict U.S. law. The Commerce Department says absolutely not. So how on earth did they get them?
That is the billion-dollar question right now. The administration's report says the chips are likely clustered in a massive secret data center in Inner Mongolia.
Inner Mongolia. That sounds incredibly remote.
It is. It's vast. It's far away from prying eyes. And crucially, it has very cheap power. And the official noted that DeepSeek likely removed all the technical indicators, the digital serial numbers, and hardware fingerprints, if you will, to hide the chip's origins. This suggests a smuggling operation of a massive, unprecedented scale. You don't just put 10,000 GPUs in a backpack and walk through customs at the airport.
No, these are massive server racks. They are incredibly heavy. They require specialized cooling systems just to transport safely. Smuggling Blackwells into Inner Mongolia is a logistical marvel. It implies deeply organized networks, shell companies, routing through third-party countries. But why go to all that trouble and expense?
Because of a technique called distillation.
Explain that concept for us.
DeepSeek used distillation to extract raw intelligence from the best American models, OpenAI, Google, Anthropic. Essentially, they used the American models to systematically teach their own model. It's exactly like a student copying the homework of the smartest kid in class, but doing it so effectively that they actually deeply learn the subject matter in a fraction of the time. But to do that effectively and quickly at that scale, they desperately needed the raw, unmatched horsepower of the Blackwell chips.
So they are using smuggled American chips to directly copy American AI breakthroughs, all while completely bypassing American laws.
Exactly. And this has created a massive, throbbing headache for the delicate trade negotiations happening right now between the U.S. and China.
Right, the ongoing will they, won't they drama regarding the H200 chip. Now, as a reminder, we are not taking political sides here. We're just analyzing the business reality of these reports.
Absolutely. The business reality is there has been a heavily rumored deal on the table with the Trump administration. The core idea was that the company would be allowed to legally sell the H200, which is their second best chip, right behind the Blackwell directly to China. But there's a massive catch.
The government wants a cut.
A very big cut. Under this rumored deal, the U.S. government would take a 25% fee or tax on the top-line revenue of those specific sales.
That is absolutely fascinating. It's almost like a vice tax. The government is saying you can sell the restricted chips, but Uncle Sam gets a quarter of the action for looking the other way.
It creates a truly bizarre incentive structure. The government essentially becomes a direct profit partner in the export of sensitive technology. But for the company, the financial stakes are huge. If the China market fully reopens under this deal, even with the tax, it is a potential $50 billion annual opportunity.
50 billion. That's nearly an entire extra quarter of record-breaking revenue just sitting there on the table.
Yes, and here is the key thing to remember for tomorrow's earnings call. Currently, the company's forward guidance assumes absolutely zero revenue from China for any restricted chips.
So if that 25% deal goes through, it's instant unmodeled upside.
Massive upside. It's pure found money for the analysts. But, and here's the major risk, if the DeepSeek smuggling scandal makes the administration furious, they could easily go the exact opposite way. They could say no more chips at all, total lockout, the deal is dead. Then that $50 billion opportunity evaporates entirely, and the global supply chain gets even messier because they have to heavily police every single chip that leaves the factory in Taiwan.
It's a geopolitical tightrope. And if there's one thing institutional investors hate, it's unpredictable geopolitical uncertainty.
They despise it. This is the ultimate wildcard for fiscal 2027. If regulations relax, the stock could skyrocket on the revised guidance. If they tighten down, it acts as a massive anchor on growth.
Now, let's step away from the politics for a minute and look at the technology itself. Because the bear case, the argument against the stock continuing this run is almost always, well, competitors are coming, AMD is releasing great chips, Intel is trying to catch up, the monopoly won't last. But Section 5 of our dive today is about the moat. And it turns out the moat isn't just the physical GPUs.
No, it's not. If you think this is just a graphics card company, you are completely missing the big picture. It's about the networking, the software, and the entire ecosystem.
Let's start with networking, because I feel like this consistently gets ignored by the average retail investor who just focuses on the GPU speed.
It definitely shouldn't be ignored. Networking revenue for the company reached $8.2 billion in Q3 alone. That is a 162% increase year over year.
That is significantly faster growth than the GPUs themselves are seeing.
Exactly. And here's the connectivity argument that Wall Street loves. You cannot just buy 100,000 GPUs, stack them in a warehouse, and expect them to work. You need to physically connect them so they act like one giant cohesive brain. That requires insane, perfectly synchronized bandwidth. You need the data to move between tens of thousands of chips instantly without any bottlenecks.
And that's where their Spectrum-X technology comes in.
Spectrum-XGS Ethernet. It allows for true gigascale AI. The business argument is simple. If you buy the chips from them, you almost have to buy the networking equipment from them to get the advertised performance. It locks you in. You are buying the nervous system along with the brain.
And then there's the software layer, CEDA.
The impenetrable software ecosystem. CED has been around for almost 2 decades now. Every single serious AI researcher learns on it in grad school. All the major open source libraries are built on it. And now they have aggressively expanded into Nvidia, AI Enterprise, and NIM.
NIMS. Inference Microservices. We hear that acronym constantly on these earnings calls. What does it actually mean for the bottom line?
It means the holy grail of tech, recurring revenue. Hardware chips are a one-time sale. You buy a chip, you own it, you depreciate it. Software is a subscription. And software has incredible 90+% margins. Crucially, it locks enterprise customers in for the long haul. Once your entire corporate workflow is built on their specific software stack, switching to an AMD chip isn't just buying a new piece of hardware. It means rewriting your entire code base. It's an absolute nightmare for a CIO.
That is a very deep, very wide moat. It's the golden handcuffs of the AI industry.
Exactly. I also want to highlight their push into physical AI. We usually just think of AI as a smart chatbot on a screen, but they are aggressively moving into the real physical world.
This is the next phase, Project GR00T.
It's a great name.
It stands for Generalist Robot 000 Technology. It's essentially a foundation model specifically for humanoid robots, and they're combining it with their Jetson platform for edge computing.
And don't forget the massive partnership with Novo Nordisk.
Oh, right. That's huge. That's the BioNemo platform. They are directly using AI to revolutionize drug discovery and protein folding.
This shows incredible diversification. The bear case is often, well, what if the chatbot hype dies down and people stop using LLMs? Well, if it does, they have robotics ready to go. If robotics slows down, they have advanced biology and pharmaceuticals. They are smartly hedging their bets across every single frontier of modern science. They aren't just building the infrastructure for the digital world, they are building it for the physical world, too.
Which leads us perfectly into Section 6, the future horizon. We are looking at 2027 and beyond. Because Blackwell is here today, but in tech, if you aren't already moving forward, you're basically dead. What comes next?
Rubin.
Rubin. Named after Vera Rubin, the famous astronomer.
Correct. The Rubin platform is the official successor to Blackwell, and it's expected to drop in late 2026 or early 2027.
They're moving so incredibly fast.
The company is officially on a one-year rhythm now. It used to be every 2 years for a major architecture update. Now, every single year, there is a massive leap forward. This makes it mathematically and practically impossible for competitors like AMD or Intel to catch up. By the time they successfully clone the Blackwell architecture, Nvidia is already shipping Rubin. They are constantly moving the goalposts out of reach.
It's relentless execution. But who is buying all this future tech? We talked about the hyperscalers spending $700 billion. But there's a totally new class of customer emerging that wasn't there 2 years ago. Sovereign AI.
This is a major defining trend for the next decade. Nations are waking up and realizing they absolutely cannot rely on private American tech companies for their national intelligence capabilities. They desperately need their own sovereign AI clouds.
We're seeing this play out with Japan right now,
Right? Japan with the Fugakuna XT initiative. The UK is building the Isambard supercomputer. France, Germany, Singapore, they're all suddenly becoming massive multi-billion-dollar customers.
I love this concept that's floating around the analyst sphere. Countries are recognizing AI as essential national infrastructure, just like the power grid, just like the internet, just like highways.
It effectively turns the company into a baseline utility provider for entire sovereign nations. It's AI nationalism, and that creates a very sticky, very reliable long-term customer base. A sovereign country doesn't just cancel its critical national security AI program because the global economy had a bad quarter. This is defense-level spending. It's highly recession-proof.
Okay, let's talk about the big number, the prediction that made huge headlines recently, the $20 trillion prediction.
Yes, this comes from an analyst forecast, specifically Beth Kindig at the IO Fund. She put out a highly detailed thesis predicting that the company could reach a $20 trillion market cap by the year 2030.
For context for you listening, the company is currently hovering around $4.7 trillion. So she's talking about a 4x or 5x return from here on a company that is already the most valuable on Earth. Is that even mathematically possible?
Let's actually do the math on it. To justify a $20 trillion market cap, assuming the current valuation multiples stay roughly the exact same, the top-line revenue needs to grow to about $900 billion plus.
$900 billion in annual revenue. That is nearly $1 trillion a year. That is almost the exact size of the entire U.S. federal discretionary budget.
It sounds totally impossible when you say it out loud. But remember, we are already looking at $65 billion a quarter right now. That's a current annual run rate of over $260 billion. If they can just continue to grow at 30 to 40% a year for 5 straight years, the compounding math actually gets you there.
It all really depends on whether you believe AI is a massive dot-com style bubble or the literal new industrial revolution.
Exactly. If AI infrastructure is truly the new electricity, then $900 billion in revenue isn't crazy at all. It's just the baseline cost of powering the new global economy. If every single enterprise company, every sovereign government, and every physical robot needs this compute power to function, the total addressable market is virtually infinite.
So, bringing it all the way back to reality. Tomorrow, February 25.
The main event.
We have a lot to watch. Just to summarize everything for you, the listener, who is undoubtedly going to be glued to your screen tomorrow afternoon waiting for the release.
The immediate focus. Keep your eyes glued to that $65 billion revenue target for tomorrow. We absolutely need to see them beat that, and we need to see the EPS comfortably beat $1.52.
And the forward guidance.
The guidance must be historically strong. We need the double beat. They need to explicitly tell the market that the infrastructure party is just getting started.
And the narrative on the call.
Right. The story the CEO tells about Blackwell ramping up, how they are solving those complex supply chain bottlenecks, and hopefully they give investors some clarity on the China puzzle and the DeepSeek situation.
I want to leave you with one final provocative thought, something to really mull over while we all wait for the numbers to cross the wire tomorrow. We keep casually calling this a tech stock. But if AI data centers are indeed the new power plants of the 21st century, and this one specific company is the only one capable of building the generators, does this company eventually stop being a tech stock entirely and just become a baseline utility for the modern world?
And if they truly are a utility, the most important question for humanity becomes, what happens if the power goes out? If that fragile Taiwan supply chain breaks, or if the geopolitics finally snap, the lights of the entire AI world just go dark.
That is a very heavy thought to end on. We will be right back here after the numbers drop tomorrow to break it all down for you. Thanks for listening to the Pro Ticker Deep Dive.
See you on the other side.